Okay, all David. Okay. Hi everyone. Good evening. So thank you for joining today's CFD webinar. My name is Sing Hui, licensed dealer at CGS International Futures Malaysia. Okay, next. Okay, so these are the topics that we are going to cover in this webinar. Firstly, we are going to share about what is CFD and also the type of CFD. So secondly, we are going to explore the difference between DMA and also market maker. And after that, you might wonder why you want to trade through CFD and what's the point of CFD. So beside that, we are going to cover about the settlements currency and also the fees. In addition, you are going to discover how you could potentially profit from this CFD. And it's my obligation to also share with you the risks associated with CFD. And you are to decide whether you want to trade through CFD and whether the CFD trading is appropriate for you. If it is yes, then you might wonder how you can trade this CFD lah. Okay, next. So what is CFD? CFD is a contract between a buyer and also a seller to gain exposure to an asset without having to take the ownership of the underlying instrument, and any difference between the open and closing trades are cash settled. Next. So if the previous slide is too technical for you, perhaps this could help lah. So basically, we are offering 4 types of CFD. First is index CFD, whereby you can trade Hang Seng Index or S&P 500 Index with our HK50 or also US 500 CFD respectively. So you don't need to build and maintaining a basket of stock to mimic the underlying index. So the second type of CFD that we offer is listed share CFD, whereby you can actually participate in the price trend of like Alibaba Group or BYD company without owning the underlying share. Now, we also have REIT CFD, where the dividend tendency investor can consider to take leverage position into this popular REITs counter like IGB REITs and also YTL REITs lah. So beside that, we also have ETF CFD on various themes such as the gold and also Dow Jones US Titan 50 ETF CFD that track the 50 largest and Sharia compliant US stock. Now, we also have ETF CFD that tracks the FTSE KLCA and also FTSE China A50. Now, next. So, for your information, these are the criteria of Bursa CFD that to be offered. Firstly, the underlying share need to be listed on main board of Bursa Securities. So secondly, the underlying correction must have an average daily market capitalization, excluding the treasury share, of at least 500 million market capitalization, excluding 500 million in the past 3 months ending on the last market day of the calendar month immediately preceding the date of offer. Or if it's an IPO, then need to be 3 billion market cap on listing. So other than that, the underlying corporation must meet the public shareholding spread requirement on the date of offer lah. So you can go to the FC website as listed here for more information about the share, ETF, REITs, and also index CFD for offering. So next. Now, one of the beauty of this trading CFD through our CGS International is that is DMA model. So in layman term, the price that you see in the trading platform is the same as the underlying in the markets and the order are execute real time. So you get to enjoy the transparent pricing and your buying and selling does impact to the markets. Now, on the other hand, if in a market making model, you need to pay extra bid and ask spread. Now, rest assured, our listed share CFD is DMA model lah. Now, next, why you need to trade CFD? So, you know what is CFD, and you may ask why. So what's the benefit do you get from this CFD? Well, you get leverage, flexibility to long and short, no expiry, transparent pricing, and also participate in corporate action, but not the voting right lah. Now, let me explain in details for you. So as mentioned, the first advantage of CFD is leverage, because you only need to come out with a small relative amount of capital to gain for large exposure to the underlying. So a 10% margin is provide you 10 times our leverage, while a 5% margin allows you to enjoy 20 times our leverage. So for example, if you want to buy 1,000 units of Alibaba Group holding at Hongki dollar of 120, you just need to come out with Hongki dollar of $12,000, 12,000 Hongki dollar to invest in Alibaba CFD, instead of you using the 120,000 Hongki to invest in this Alibaba share. This is because our CFD only charges 10% of margin. Now, another example is Apple. So its underlying is pretty much expensive at $230 lah for one share. And you need 2,300 to hold 10 units of it. So with CFD, you just need $230 to hold the same of 10 units Apple. So if you are the index trader, you also can see the difference lah, because you need around $1,006 to trade one lot of E-mini S&P 500 futures. Even if you are trading the smallest equivalence, which is the micro one, you still need around $1,600. So it is relatively capital intensive regardless of whether you have capital or not. However, with CFD, you just need to come out with around $290, assuming the S&P 500 is trading at 5,800 at 5% margin per unit lah. So with our cash index CFD, you can slowly build up your index position without needing too much of capital. So the same goes for this IGB commercial REITs CFD. At 30% initial margin, you just only need 150 ringgit to open for 500 worth of IGB commercial REITs lah, assuming that you are buying with 1,000 units at 50 cents each. Okay, next. So bear in mind that with leverage, your gain and losses will be magnified, and the risks are much greater. This means that there is no maximum limit on your gain if market move in your favor. However, if the market move against you, you may lose more than the initial fund that you deposited lah. So good thing is that you can minimize the risk by using our trading platform IRES contingency order to place your stop loss order. Okay, next. So the second reason why you should trade CFD is that it gives you the flexibility to take a bullish or bearish stance in index and listed share CFD, meaning you can long or short the CFD. So in layman term, long means that you buy now and then you sell it later. Short means that you can sell first and then you buy back later. Therefore, CFD is a helpful tool to gain exposure in both bullish and also bearish market. So for example, if you want to enhance your portfolio return, you can long index or share CFD. Whereas if you want to protect your portfolio from like Apple, Microsoft, or Tesla share that you are anticipating in a bear market, then you can individually short this kind of CFD, the Apple, Microsoft, or Tesla CFD, or you short the US tech CFD, which is the underlying of Nasdaq 100. So any gain from this CFD that can be used to cover your losses in your actual portfolio. Okay, next. So the third reason that why you should trade CFD is that you don't need to worry about the expiration. So there is no expiration for like US 30, US tech, or also US 500 CFD. Well, if it's in futures, the expired date is every third Friday of the quarter of the year, like which is tomorrow. Now, another example is that with HK50 CFD, it does not expire. Well, for the futures, it expired 1 day before every last business day of the month. So as long as you have enough fund to fulfill the margin requirement, you can always enjoy the flexibility to decide you want to hold your CFD short-term or also long-term. Thus, you have a choice or an option to decide to hold short-term or allowing you more time for your trades to play out in the long run. Okay. Now, the fourth reason of why trade CFD is that the transparent pricing. As mentioned earlier, because of the DMA, direct market access model, now you get to enjoy the transparent pricing in CGS International listed share ETF REIT CFD. So you can participate in the liquidity and order book of the market lah. And what you see is what you get. So client can make and tag the price. Well, for our index CFD, it is streamed real-time by panel of liquidity provider. Okay, next. So participate in corporate action is also one of the advantage to trade CFD. Despite not actually owning this underlying instrument, right? Our CFD still allow you to still enjoy the following corporate action, which is like cash dividend, bonus issue, share split, and also share consolidation. So for example, if Apple announced of 25 cents dollar of the dividend per share and you actually held 10,000 units of it, of long lah. So you actually entitled to this $2,500 of dividend before withholding that tax lah, if applicable. However, keep in mind that you are not entitled for any voting right lah for CFD, so you cannot vote in any annual general meeting lah. Okay, so the next settlements currency. Now we are pleased to inform you that our CFD product, they are settled in their respective settlement currency lah. So all profit, losses, and charges arising from your trade in your account is in respective currency. So if you trade Maybank CFD, then it's settled in ringgit. If you trade Apple CFD, settled in US dollar. While for Japan 225 index, then it will be Japanese yen lah. You can always refer to your statement to check the balance of each currency in your account. So you can also inform your respective FBR lah if you wish to perform any like foreign currency conversion. Okay, next. So how much are the fee for CFD? First, there is commission. So our commission is charged based on each CFD trade and calculate based on certain percentage of the full contract value of the underlying stock, whichever is bought or sold lah. So the formula of this calculation of commission is quantity times the average trade price times commission rate. So for example, if you are trading this XYZ CFD with 1,000 units at $10 with commission of 0.25% or minimum of $15, so the commission is charging on $25. Well, another example here is if you are trading ABC CFD with 500 units with $5 and then the commission rate is 0.25% or minimum of 15, your commission is charged for 15 because even though the calculation is $6.25 lah, but we still need to charge on this minimum commission. Now you can always refer to our website here for the latest commission rate. Okay, so we also charge an overnight financing fee if any CFD position are held overnight lah. So it is compute based on the end of day mark to market price and charged on full contract value. So this overnight financing are charged at an effective rate and is debited or credited from your account on a daily basis lah. There are no financial charge if you close the position within the same day. So the accrual day one day each, while for Friday are considered as 3 days to take into account of Saturday and Sunday. So the number of days in a year is 360 days for any USD settle CFD and 365 days for the rest. You can also refer to our website lah for the latest financing charges. Now, how much are the fee? So let's go through with these two examples to understand how do we calculate the financing fee. So we have, so for example, if you are long on 1,000 unit of this XYZ CFD and the mark-to-market price is 10 from day 1 to day 2. So we got a central bank rate of 0.98% and also financing rate of 4%. So the effective rate will be central bank rate plus the financing rate, which is the 4.98%. And the day count is 1 because of the US position, the year count will be 360. So your long overnight financing will be 1,000 times $10 times the effective rate of 4.98% and then divide by 360. So you actually charging 1.38 of financing fee. So another example is that if you are holding short of 1,000 XYZ, right? So the effective rate a bit changes here lah. So the effective rate will be financing rate deduct by the central bank rate. So the effective rate is actually 3.02%. And same for the day count and year count. So your short overnight financing will be 1,000 times 10 and with this 3.02% and divide by 360. So actually the financing charge is charged you $0.83 lah. So in the case that the central bank rate is greater than this financing rate, the short overnight financing is credited into your account, meaning to say that you are actually earning the financing rate. Okay, next. So how can you potentially profit from this CFD? Now we're going to discuss about this lah. So let's see the profit scenario here. For example, if you are buying 100 units of Microsoft at $300 at Friday, so with traditional share, which is the cash upfront account, your initial outlay you need to pay in full, which is the 30,000, same as the contract value lah. But if you are trading CFD, because of the 10% margin only, you just only need to come up with $3,000 lah. And assuming that commission are 0.2% for both, so this 60 are derived from this 30,000 lah. And then on Wednesday, you decide to sell it off at $320. So you actually are gaining $2,000 because of the contract value is 32,000 deduct by the when you enter 30,000. So both are the same, and also the commission 0.2% when you close your position. So charging to the 32,000 of 0.2%, you actually get charged of $64 for both case are the same. Now we go to the financing cost of 6% per annum. Because of you come out with all the fund 30,000 for this traditional share, so you don't get charged for any financing cost. However, if you are trading for this CFD, you actually get charged of 6% per annum lah, like just now how I mentioned. So we take the 30,000 times 6% times 5 divide by 360. We times 5 here because you are holding it for 5 days because Friday need to count for 3 days lah. So for the financing, you actually get charged of $25. Now the net profit is that 2,000 of your earn deduct by the commission when you enter 60 and then deduct for another 64 when you close your position. So with cash upfront account, you are actually earning 1x76. Well, for this listed share CFD, you need to deduct another financing cost, which your earn is 1x51. However, if you look through on the return, you are actually for traditional share, you get 6.25% because of you come out with this $30,000. However, if you look through to the CFD, because of you only come out with 10% margin, which is the 3,000, so your profit is actually 61.7%. So you can see the gain is actually amplified due to the leverage. This is how CFD can give you potentially big gains and enhance your portfolio lah. Now, with this low trade, this is what you could expect lah. So with the same scenario, Friday you enter 100 unit of Microsoft at 300, and then with same initial outlay and contract value, and also the commission charge. On Wednesday, you close it off with a losses of 280. So you're actually losing $2,000. This is your trade losses lah. And the commission fee, 0.2%, is charged based on the contract value of 28,000. So you get charged of $56 for both case. And same for the financing, you also get $25 of charges lah. And when you see to the net losses, you need to get the trade losses 2,000 and also deduct the commission when you enter and when you close. So you get the net losses of 2,116 for your traditional share. And for CFD, you need to add another financing cost, which is 25. So your losses is 2,141. Now, when you go to the return on initial outlay, right? With the cash upfront account, you actually lost 7.05%. However, with CFD, your losses is magnified lah, with 71.37%. This is because of the leverage also. So your losses in CFD is relatively larger because of leverage. Now, next. Okay, it's my obligation to also share with you the CFD is a complex, speculative, and high-risk product and may lead you to unfavorable financial outcome where your losses could be more than your initial deposit. So you should get independent advice and consider carefully if this product is appropriate for you with regards to your personal circumstances, investment experience, financial goals, and needs. Now, until you fully understand the product, benefit, and risk, you should not trade CFD. So these are the CFD risks, including but not limited to leverage risk, counterparty risk, market risk, liquidity risk, and then gapping risk, execution risk, stops order not guarantee, foreign exchange rate, and also operational risk and regulatory risk. Okay, next. So if you are still considering to trade this CFD, right, you can ask yourself this question. So do you have previous investment trading experience in financial products such as securities and derivatives? Or do you understand the difference between investing in share and trading in CFD? Or do you understand the concept of leverage, margin, and volatility? Or are you prepared to monitor and manage the risk of trading? And also, can you afford to lose all of it or more than the initial capital that you put in? So if your answer are yes to all this, right, then CFD is considered appropriate for you. Okay, so how to trade CFD if you want to? Okay, you will be provided with a CFD trading platform to trade online. So the selected market feeds are delayed by default, but you can always subscribe to real-time market data. Now, the trading platform allows you to view account balance summary and portfolio details, and then create and manage your watch list, allow you to buy and sell the CFD order, and also input contingency order to manage your risk, and also allow you to search and view your historical executing charts lah. Okay, moving on. Here are the types of order that are available to you, including markets order, limits order, stop loss market order, stop loss limit order, and also take profit order. So for more information about the order types, right, you can refer to our education and guide tab that the website show here lah. Okay, next. Now we are delighted to inform you that we have a CFP mobile app so that you now can also trade CFD from your smartphone besides using your PC with our web-based platform lah. Okay, so if you like to know more about CFD, we have prepared this CFD Investing 101 video series for your reference. So it can be found at cgsi.com.my/encfd, and then you follow by here, click the FAQ and open an account under product and service, CFD, education and guides. So these are the 3 CFD videos that we make for you lah. Okay, so if you have any question on CFD, okay, next, you can always contact your respective commission futures broking representative. Or if you don't have any commission futures broking representative, you can contact us as the phone here 03-2635-8908 or email us at futuresbroking.my@cgsi.com. Okay, now let's move on to our main topic of today, navigating opportunity in China and Hong Kong market in 2025. So with our speaker, Mr. Koh Se-Siang lah, Head of Retail Research in Malaysia. Okay, Mr. Koh, over you.
Yep. Thank you, Xinghui. Okay, 1 second. Yeah. Sorry. Let me turn on my. Okay. Okay. Good evening, everybody. Nice to see all of you here. Yeah. So first things first. For those who don't know me, I am the head of retail research here in Malaysia. I cover mainly Malaysia. Of course, I overall I would also look at what's happening over in US and in Asia as well. So if officially I don't look at China, Hong Kong, it's done by my colleague in Singapore, Weiren. But yeah, so overall, I still do look at China, Hong Kong as a whole. So in terms of stock picks, also I will also still look, but basically they are not something that I will look at every day. So I'm going to give you some views mainly on a slightly longer term basis. It's not going to be what's going to happen tomorrow. So it's not something I'm going to tell you today you can buy tomorrow morning. Yeah, tomorrow morning you buy and then the evening can take profits or take a loss on that. So, but it's going to be slightly longer term. Okay, so it's not moving. All right, so we just a disclaimer. And so today I'm just going to talk about emerging markets in Asia. So basically, mostly just China, Hong Kong. But if you take a look at, firstly, we're going to look at the ETF of the MSCI emerging markets in Asia. So basically, what is made out, or which country is made out of this ETF. So you can basically take a look at what is on Bloomberg. It says there's top geography. It says so it has China, Taiwan, India, South Korea, Malaysia, and so on. But I think I have already give back a lot of my geography to my secondary school teacher. But if you take a look at the second last line, it says there island. So I'm not too sure whether why island is there in it, but yeah, it is. So anyway, so just moving on. So we're gonna just besides that, so you can see China and China takes up a big chunk of this ETF. So it will, if just by looking at this ETF, it will also give you a rough idea of where these Asian markets are heading. So basically, if we just take a look at these, we think that emerging markets have been long underperforming the US markets. So since the GFC, since 2008, the US market has always been outperforming. So mainly one of the reasons is because the US dollar is actually very strong. So one thing is that, and you see that's why because of the weaker local currencies here in Asia, you see that the local markets all in Asia are underperforming if you compare to the US markets. So, but we think that this could be changing soon. We will show you why. So right now, if you take a look at the chart below, you can see that despite all the uncertainties or the negative narratives you read, negative stories you get, all the sentiment is very bad. It can stem from deflation in China. There are lots of problems in Thailand and recently in Indonesia. You can see that the EEMA, which is the Emerging Markets Asia ETF, is actually rising since hitting a low in 2022. So to me, it shows that the markets are actually doing something else while news and everything are actually very, very negative. So that tells me that something is actually the market, or so big funds are actually in the market already. So we think that we are on, at least Asia is on the verge of a major bull run that could be coming. So the outperformance of the US could end soon, and very likely emerging markets. I think it's not going to just be emerging markets in Asia, but it's going to be emerging markets globally that will soon take the handle and be the one that is going to outperform the US markets. So if you take a look at based on the charts, you can see there's a structure of a clear higher high, higher low in place since the low in 2022. And then there is also a possibility of a third wave that is coming through. So here in here in CGS, we actually look at markets based on wave counts. So wave counts is just a way of how we sort of like try to predict or where the market is heading. So usually in equity markets, the third wave is usually the strongest, or where prices would move the furthest and it will likely be extended. So third waves is where all the big guns or big funds will start to come in, and we see that if you just take a look at this chart, we can see that it's some form of a third wave is in place. So potentially higher prices is likely to see, and it's going to be strong and possibly fast as well, going to come through in Asia. So here, if you take a look at, because one thing, dollar strength has been very strong since 2008, but we think that dollar may have temporarily peaked in 2022. I think that emerging market currencies will start to turn around and actually be strengthened in the coming months. So again, this is a basket of, the black line is Deutsche Bank's emerging market currency. So it's a basket of currencies. So it's not going to just be one. So some currencies may still underperform the US dollar, but I think generally overall, we should see the strengthening of emerging markets for FX in the coming months, going forward into 2025 and 2026 as well. So here, if there is a chance where these currencies start to strengthen, there is also a good chance that emerging markets will also strengthen in the coming months for most of the Asian markets here. Here in Asia. Okay, so if you look over in the Shanghai Composite, I think 2025 will be a year of recognition. So this is where most people will start to take notice of China. I think because of you can say it's because of DeepSeek started a major run, but this is something that we already saw prior to DeepSeek being announced. I think if you look at last year's CFDs in October, where we had this webinar as well, we already mentioned that something big could be happening out in Hong Kong, China. So here, basically, if we take a look at is that the 16-year consolidation from the 2007 highs for the Shanghai Composite is done. Very likely is completed, and we could be at the start of a major bull run here in China. So as I mentioned, third waves are usually the strongest, and you can see that in this Shanghai Composite as well, from the 2024 low, sorry, there is also a structure of higher high, higher lows, and a series of ones and twos may be in place, and we could be at the start of wave 3 coming through. So the red wave 3 will be where the strong move will come in, and there is also where most funds will also start to take a look. Not just take a look, will possibly participate in the current moves higher here for the Shanghai Composite. So we have our long-term targets. We expect prices to go to new all-time highs. So the all-time high is 6,124 here for the Shanghai Composite. We have targets of looking at about 7,008 to about 8,008. Of course, it won't be within a few weeks. This is a multi-year breakout, so it will take some time to get to those levels. But we do expect a move to all-time highs over the next 3 to 5 years. So near term, the trend line or the dotted line is where the resistance will be. There's roughly about 4,250. That would be the nearest resistance together with the round number of 4,000. That could be your immediate target, possibly for 2025. So long-term players, we do think that it's from a risk to reward perspective, Chinese stocks are actually at a very, very strong level to start accumulating if you haven't already. Any weakness that's coming through over the next few months very likely will remain good entry levels here for Chinese stocks. Same thing here, this is just zooming in. You can clearly see the structure of higher high, higher lows here since the 2024 February low. We're still looking for more upside to come. So here, if you're really aggressive, you can look to get in now. Your stop would be below 3140 here for the Shanghai Composite. So what is going to lead the overall Chinese market? I think with DeepSeek, I think that is also one reasons we are seeing that the Chinese information technology sector is actually outperforming the overall market. So this is the CSI 300 Information Technology Index. So you can see that just basing on how far it is from its major wave 3 high, which was the 2007-2008 high. This one is actually trading only 14% off that high. But if you go and look back to the more traditional index, which is the Shanghai Composite, you can see that prices currently are trading at only 79% from its wave 3 high. So that's why you can see there's a vast difference in terms of sector movements and funds where they're going. They are going mostly into the technology or information technology sector. You can see sectors like the more traditional sectors like property and all are still lingering very close to its low. So from just based on these two sectors, you can see that Shanghai Composite compared to the CSI Information Technology Index, you can this already tells you that there is quite a bit of relative strength. It can be found in the technology sector, in Chinese technology sectors. So if you think what is going to lead into the major rally or the major bull run that we are expecting, very likely is going to be this sector where the CSI 300 is already telling you that is taking place right now. So from here, there is a structure of a wave 1, wave 2. It's currently going into its wave 3 as well. So strong funds movement that is going into this technology sector, I think, which is what we are seeing right now as well. So that was China. So just quickly move on in matter of time. You can see that the Hang Seng Index, this was shown sometime in October as well. So you can see that it's clearly still in a sideways movement, but within the sideways movement, we're still looking for higher prices in the coming months here for the Hang Seng Index. So the red trend line comes in roughly about 28,200 or so. And there is a major support or key support here at 18,600. So if you zoom in, you can see that it's stair-stepping higher very nicely. Every time it pulls back, it drops into key support level. So right now, the immediate key support remains the last swing low, which is about 18,006 that I mentioned just now. As long as it stays above that level, any chop or any pullback would be a nice entry level here for the Hong Kong market. So the immediate support that you can see here that I put down into the chart here is about 21,200 to about 22,300. That would be an ideal zone for getting long if there is a pullback over the next few weeks. So near term, I think besides the 28,000 trend line, we're expecting some sort of a resistance at about the 26,000 to about 27,900 levels. So of course, because this is a weekly chart, the range or the resistance is slightly larger, but nonetheless, that is the level that we are looking for over the next couple of months, possibly going into the second quarter and the second half of this year. So we're still positive on China and Hong Kong, at least for in the short term. So in terms of stocks, just quickly move through. This is a very long-term chart for Tencent. So Tencent is still in a major bull run, and I think it's gonna start, or it's starting on its next move higher already. So any juncture, any pullback here remains a buy here for Tencent. We're still looking for higher prices. The movements from the 2023 low, you can also see a new structure of higher high, higher lows that suggests that the trend is resuming to the uptrend. So you can zoom here, zoom in, you can clearly see the nice structure. So any pullback to this 432 to about 482 levels is a nice entry level here for Tencent. So long term, it has targets of about 589, 670, and 700 over the next few months. We're still expecting more upside to go as this uptrend slowly chugs along. For Alibaba, there is a very ugly inverted head and shoulders pattern here. So the recent breakout in February do suggest that this is likely a turnaround story. It has, just based on this inverted head and shoulders pattern, it has a target of roughly about 175. So there's still quite a bit of upside to go. I think any pullback to a key support of about 100 to about 119 levels here is a good entry level here for Alibaba longer term. The key level, or the key stop level to watch out for, is about 77.35. So we also like the banks, despite of all the news of possible shadow banking and things of deflationary with property companies going bust and all. But banks, you can see, has continued to outperform no matter what the news suggests. So that to me tells me that, hey, this is definitely not a bear market. This is definitely a bull market to me. So you can see with prices also trading at all-time highs, that is also supporting the idea that this is more of a bull market than a bear market. So like any negative news that take prices down is still a buy for the longer term. Of course, you need to have a slightly a longer term of 3 to 5 years outlook, but short-term wise, that will also provide momentum as well. Any pullback also would likely give you a stronger boost when prices resume on its uptrend. So for ICBC or 1398, we're still looking higher. Targets of roughly about 650 to about 880. Longer term, short-term pullback to about 503 to about 522, which is a good buy zone for both traders and investors. The previous high at about 470.80, if it drops so deep, that will be even better. That is also where the 200-day moving average is, which will also likely provide support for the longer term. BYD, with the news recently over its new shorter charging period for most of its batteries, that would also it's actually positive for the stock. But if you take a look at this chart, it's before this was announced, the stock has already ran, and the chart also told you that this is already a very good stock to look at. So the breakout actually took place sometime in February as well. And it actually pushed to all-time highs, with prices now still lingering near the top. Any weakness also still a buy here for BYD. Longer term, we're still looking for targets at about 430, 471, and a very long-term base target of about 604. So here, the key level to watch is roughly about, if you're looking at a very short-term trade, then your stock should be at marginally below 334. But if you're slightly holding for a slightly longer term, I think any prices that drop to about the 318 zone, which is the previous sideways trading band, that would also provide a nice entry. The longer term stock would be below 245 40. So BYD also has its own electronic arm. I think that is actually much stronger than BYD itself. Its one also pushed to a new high in February. The pullback has been shorter. It's holding a very nice entry level right now. If you zoom in, you can see a very nice, clearly pullback. It's has yet to break out of the current short-term trading. So this one here has got short-term trading opportunities. So if we take out yesterday's high at about 53. So if we close above 53, you can actually look to get long here with BYD Electronics. Stock code is 285. Your stop should be below the last swing low here at 47.40. Yep. So a nice uptrend. The structure does suggest that even this swing could easily take prices up to short-term targets of about 56 to 61. But longer term, we expect prices to actually continue on to about 79 and 90 long term for BYD Electronics. So besides banks, insurance also looks very good. I think if you just zoom across most of the larger insurers, from Ping An to China Insurance and AIA, all does look that consolidation looked like it's done. It's just at the start of a bigger move to the upside. So insurers always lags the banks. But I think the structure here also does look very interesting, given that the nice structure of high low from the 2024 lows do suggest that a new uptrend is actually taking place here for most insurers. For in this case here is Ping An. There is a nice short-term support here, roughly at about 44. 75 to about 45. But I think if you zoom in, there is a tighter stop, tighter entry level here for Ping An. If you zoom in, I think today it dropped a bit. I think it has fallen very close to the short-term buy zone here at 49.70 to 50, 55. This one here, the stop is at below 46.30. You can also place your stop below 44.80. But yeah, I think below 46.30 will be good enough for a stop. Looking for a move to test the October highs at about 59.80 and the 60 Hong Kong dollar round number. So, okay, I think that is all there is from me today. So we'll just take a look at some of your questions if there are any. I'll pass it back to Zinoy first. Thanks.
Okay, thank you, Sexiang. So I saw there's some question coming in. So first question about what is your overnight fees and also the spread. So as mentioned just now, we are the direct market access model, so we don't have any spread. And then for this overnight fee, you can always refer to our website. We do already step there lah. You can refer to our cgsi.com/en and then /CFD. Yeah. And also, you can refer to iTrade website also lah. So, I saw another question, how much margin needed? So this one also we stated in the website lah. And then there's one asking for end of talk, could email slide as notes for all knowledge to know related to CFD. Okay, so we are pleased to inform that we actually recording all the video here, the webinar here, and then you can look through in the Facebook page of our CGS International Securities Malaysia lah. Okay, so another question, how does the geopolitical tension affecting this stock? Okay, Sexiang, you want to answer this?
I think it will cause some short-term volatility, which I think will provide a nicer entry if you're trading a longer term. Of course, if you're trading short term, then it really depends on your own strategy, how effective or your strategy is in case of the current volatility. But if you're a slightly longer term player, I think any pullback here again would be provide a very nice entry for a longer term trade.
Okay. So another question, is only sophisticated investor allowed to open account? Yes, but SC already widened up the requirement lah. So if you do have any licensed person or you are those educational person, then you able to open account with us also. So you can always call in to us or you just email to us. We will assist you. Yeah. And I saw another question. So based on Alibaba chart, what level will trigger more selling pressure? So Sesiang, you want to help on this?
Yeah, sure. Can I have the screen?
Okay.
Yep. Hold on. Yeah. Anyway, I mean, if you're trading Hang Seng, you can start to see some weakness creeping through here lah. So this three candle reversal could be forming some sort of a wedge-like pattern here for HSI. I think once it breaks this line, I think potentially could see quite a bit of correction take place, but still correction short term, but likely is going to continue on later lah. So if we take a look at Alibaba, so Baba is 998. So if you're taking a look at the short-term view, yeah. So very similar to Hang Seng. This one is just very likely just a short-term correction, but there is a slight difference here for Alibaba. So this one here could potentially peaked already, and then it could just break the line and consolidate. Which level to look at? I think the previous high would provide a nice level to look at. I think the pullback would likely drop to those levels also. Yeah, so if it does break the line, which is the short-term line is roughly, oh, where am I? So about 133.80. I think if it breaks that, then potentially it could drop to about 118 to this low here at about 124, 125. Yeah, so that could again, of course, when it's falling, don't just buy, wait until for prices to actually turn around. Then only you start to look to get long again for the longer term. So this one here, again, at this juncture, I would say it can go either direction. If it's gonna spike, very likely that spike would possibly be the last move before a deeper correction. But if it breaks this line, then straight away you should see that correction, and that will provide a nicer entry for the longer term. I think the longer term range or buy zone is about 100. Yeah, so 100 to about 119. So anywhere between this range is a good buy for a longer term. As you can see, this head and shoulder pattern here, if it pulls back to the neckline, that will again provide a nice entry level for Baba longer term. Short term, I think can go either way. But if there is a spike, very likely it will be a short spike. Then you see a pullback after that.
Okay, Sesiang, I saw another question. Can you help to look into Geely?
Okay, so you can take a look at the long-term chart for GB. Is the structure here is very clear. It's still on an uptrend. Yeah, so I think this one here could continue on for now. ABC. Yeah, so I think for now, longer term, very likely will will go beyond this 33 level. But short-term wise could see a little bit of pullback. Uh, Yeah. So I think pullback could go back to fourth wave. Yeah. So I think anywhere between 1320 to about 1475 would there would be some support here for Geely. Short term, possibly one more spike to the upside. So the trend line break. Sorry, something that is not something that I've looked at all the time. So I got to 1720. Let's low. Yeah, okay. 1720 looks like a nice key level. So if we break 1720, high chance we could see a consolidation down to the 1320, 14 something levels that I mentioned just now. Yeah, so potentially could see an ABC correction coming through here for GD. But long-term wise, I think any pullback close to the 200-day moving average should provide a nice entry level. This is also within 13 and 14 levels. So yeah, so 13, 14 levels seems like a very nice, strong support here for GD long-term. But short-term, there are options for some correction to come in for Geely. So 1720, immediate support is 1720. That's the key level to watch out for here for Geely on the downside.
Okay, thank you, Sexiang. So I saw a question that do you offer Geely CFD? Yes, we do offer this. And also question about does your Alibaba CFD allow for short? Because okay, our audience want to hedge. Yes, we do offer CFD Alibaba and also allow for short lah. So let's see another question.
Yeah. So
Okay, we
basically,
got
I think for sorry, Zinghui, but for the stocks that are covered in the products, you can just go to CFD, I think. Yeah.
yes.
Available offerings for this product, you just click. Yeah, it's all here. Like the list is all here. So if you're looking for stocks to short or long, either way, all the stocks that are listed here can be traded. Yep. So you just click on one like this, then it will take you to the whole list of stocks that you can trade.
Yeah,
Yep.
yeah.
Just a
Okay, another question here. Can help to look into Xiaomi.
Okay, so here I have a different view compared to my colleague that covers Hong Kong. I would not say it's not a buy, but yeah. So very likely, I think we are coming to some sort of a peak here for Xiaomi. But the long-term view is definitely still up. Okay, so we have come to very likely come to some sort of a resistance in place. Sorry, the mess. Okay, so this one here, I think we should be coming to a some sort of a consolidation. I think any pullback, so if it drops to this 35 level, 36 level, if it drops, that will be a definite entry. But I don't know whether it will drop to that level or not. But we expect some sort of a consolidation to take place in the coming weeks here for Xiaomi. So if you take a look at this so this long candle here,
Okay, Sexiang, sorry, we do not see the chart of Xiaomi. Can share the screen?
you can see it. Hold on. Can you see now?
Okay, okay, can see now.
Okay. So basically, you take a look at Xiaomi, this candle here is actually a key level. Okay, look at this strong volume. So this one here suggests that whoever that didn't buy here would have already bought, but there was some selling pressure. So you can see that market is still, or the stock is actually still struggling below this low. So potentially this could be, it's still early days. Maybe one more black candle would likely confirm that this one would likely go into some sort of a consolidation. Because if you just draw a trend line, so if it breaks that line, then high chance we'll see further consolidation, possibly down to about 48 at least. If not, it would drop to about 40, 45 or so for Xiaomi. Again, that 36 level, if it ever drops there, very high chance that it's a very, very good entry level for Xiaomi for the long term. But short term here, I think we could be coming to some sort of a peak. Possibly some correction may come in here for Xiaomi. Yeah, but long-term picture is definitely still up, potentially going up to about, I would say about 100 or so. But that is the long-term view.
Okay, thank you, Xiang. So I saw another question. Any financing rates if I trade intraday? No, we don't charge any financing rate if you are trading for intraday. So if you are holding for overnight, then only you will get charged lah. Okay, so for our audience, if you have any question, you can type out in the Q&A box lah. If not, then we almost come to an end for this webinar. Okay, so there's another question that is there an ETF that tracks China? Yes, we do have the Principal FTSE China 50 ETF and also the VP DJ Sharia China A-Share 100 ETF lah. Okay, so another question to comment on SMIC.
SMIC. That's Taiwan. We're very clear uptrend. I think without knowing how to read the chart also, you can clearly see it's a very nice uptrend. Yeah, but short term also could see some sort of a pullback. Yeah, so pullback previous high is 44.50. Yeah, so possibly about 40, I think at least 38%, which is 42. I think any pullback to 42 or 37 should be a nice entry level here for SMIC. Yeah, long term still looking good. Just that short term could see some consolidation. I think most of the Hong Kong stocks does look like is ready to go into some sort of consolidation. The problem is whether the consolidation has ended and then it's just gonna spike. It could happen as well. I think from the daily chart, there is also a chance for short-term trading if you're looking to go. This pullback here provides a nice entry. Only thing is don't have a white candle. So if it has a white candle here, you can look to get long. Your stop should be below 47.55. Possibly looking for one more swing above 60 first to complete this uptrend. Yeah, I think that's for short term. Longer term, I think any pullback to 42 is still a buy for for SMIC.
Okay, so I think here's the last question lah. Does your CFD trading platform has chart analysis features? Yes, our platform do have the chart, and then you can add your own technical analysis, that whatever you want lah.
Yep.
Okay. So I think we just end here. So thank you very much to our member of audience and also our speaker, Mr. Kong, for your time to join today's webinar. So I hope you all enjoy it and also manage to get some insight towards the China and Hong Kong market lah. So stay tuned for our next quarter of CFD webinar. So it's around June lah. Okay, thank you everyone.
All right. Good night, guys.
Okay, good night.